I work with sellers and CPG brands from around the world, and the US market is the market to be in, right? So if you're doing 10 million euros a year in Germany, well, you should be able to do at least that or more in the US market, right? If you've got a brand that converts. Now, it's quite tough for specifically European founders to understand how the US structure works. And I do find that there's a lot of fear about compliance. The guy's got a proper brand, they're doing 10, 20, 30, 50 million in Europe, in the UK, Australia. Now they're looking at their expansion into the US. For those guys, what are some of the common pitfalls that these non-residents, i.e. non-American sellers, genuinely make that you encounter that they could avoid?
So there's several. First of all, just from a tax planning point of view, if they're going to sell from the German entity on Amazon, which we know you can do, a lot of people assume inadvertently, I'm not subject to any U.S. taxes. And for most of you, that might be the case. But there's some situations you may trigger by attempting to work with a U.S. retailer. You need an office. They want some physical presence. There's usually something else that comes into play that you don't take a step back. How will this impact my German company? Did I create a permanent establishment? Am I now subject to U.S. taxes? Well, what is that going to look like? So that's more of an advanced concept. And then when you add different marketplaces, like you want to add TikTok Shop, well, they require a W-9. That means you got to create a U.S. person. That means that can't be a single member LLC disregarded, owned by the German company. Couldn't be owned by the German company because the ultimate beneficial owner has to be listed owns 25% or more. Some people might have a U.S. company and they had a bank account with Wells Fargo because they set it up 5 years ago, or with Citibank. And guess what last year? There's several banks that got fined millions and millions of dollars for not following the KYC rules. So these banks, for example, they want a real address, not even a virtual address. Well, what does that real address do to your U.S. tax responsibilities? Do you want to keep that account open? I know it's convenient, it's easy. Sometimes you have to give up a little bit of convenience for the greater good.
And I suppose what also comes in here is this concept of permanent establishment. So people think, I've seen it, guys will come in and they'll do something in order to meet a verification process. Oh, I'm just going to use my friend's address as an office address. Well, now you've got a physical address. Well, I'm just going to employ this person in America, so I've got a physical person in America. Well, now you've got physical presence, right? And now you've got to pay tax in America versus this flowing through. I know that whole physical presence test for sellers can be a bit of a gray area, but in conjunction with the double tax treaty, a lot of the time it can flow through. But I suppose you'll also even have the discussion, maybe you want to pay tax in the USA rather than in Germany because the tax rates on the corporate tax is lower. But these shortcuts land up with consequences later on, don't they? So, I employ Bob, who's my cousin in Texas, in order to have a local address. I can have a US bank account. Well, later on, you suddenly land up paying taxes because of physical presence rules. I think those things to think about up front carefully